Yeah, no, I think we delivered very well on these results. We had very, very strong performance from the Nordics, and despite some of the macro headwinds that we see in Bangladesh, we continue to deliver well on all, call it our sort of outlook parameters, and delivered a very, very strong cash flow for the year. And that gives us confidence in the outlook that we have set now for 2025.
Let me ask you about Bangladesh. It's been quite a challenging year over in Asia, in particular in Bangladesh. Any signs of recovery there? I know a lot of it has been out of your control.
Yeah, I'm going to be careful in terms of speculating on the speed of a recovery in Bangladesh, but clearly in the second half of 2024, it's been a lot of macro turmoil, both political and economic, and that has affected the group numbers for 2024. So we're obviously following the development in that country very, very closely, and daily sales revenues, etc., are key parameters that we will follow with a very sharp eye moving into 25. But hopefully it'll be a V-shaped recovery, not the more protracted U-shaped recoveries I saw in my former industry, the airline industry.
Hopefully you can expect a little bit more stability from this industry. Let me ask about your home markets, a brighter spot in your earnings. The Nordics have been quite strong. Where is the growth coming from in the Nordics, in your home markets?
Yeah, no, look, I think the Nordics are really delivering, on all cylinders. But within the sort of Nordic footprint, particularly in the fourth quarter, we saw very strong performance from Norway, and we saw very strong performance from Finland. But throughout the year, we see strong performances from our various businesses, and that gives us confidence in, call it, the mid-single-digit organic EBITDA growth expectations into 25. If we use Norway as an example, which is, call it, the home market from where I work, here we have one of the world's best networks in one of the more expensive countries in the world, and we're seeing that our customers are demanding more and more services. So our more for more strategy, which we are using across the Nordics, of adding on additional service elements to our mobile subscriptions, are really, really helpful in terms of driving average revenues per user. And that is a strategy that we see is working very well for us as a group in the Nordics.
What does it mean for profitability if you're adding more services? I certainly appreciate that that's positive from a revenue perspective, but from a cost side, how are you managing?
Yeah, we have a very, very sharp eye on the cost, and I won't go into all the sort of operational transformation issues that was outlined well by Benedicte in the presentation today. But we have a really sharp focus on making sure we take the cost down. And you got to remember that some of the services that we are adding on top of our mobile subscriptions are not necessarily that expensive, but nevertheless, it's in real demand. And I think our security filters, just as an example, we have stopped about 2 billion attempts to sort of defraud our customers over the last year. And that is thanks to the security filters that has been added both on the mobile side, but also on the fixed side in Norway.